CNBC-TV18.
Stocks trade firm but ranged as global uncertainties linger. Power, industrials and metals gain while IT and consumer durables trade soft.
Adani Cements has reached an arrangement with truckers in Himachal Pradesh to trim freight costs by 10 to 12%. The move paves the way for units of Ambuja Cement and ACC in the state to resume operations.
The government has directed power units importing coal to operate at full capacity in the peak summer months to avoid power shortages. The diktat suggests compensation for higher costs buoys stocks of Gencos.
Hopes of China announcing a stimulus package in the month of March lifts steel prices to a 7-month high. Stocks of Indian steel makers gain on cue.
Hello and welcome to Halftime Report. I'm Sonia Shenoy. With me is Ekta Batra and Mangalam Malu. Well, not too much happening in the market. Expectedly, it's just a range-bound market with 18,000 proving to be a firm ceiling for the market, at least for now. We are gravitating in a very tight 100-point range at the moment. But there are a couple of pockets that are perhaps looking good. Banks are coming back after, seeing very weak performance over the last many days. On the downside, you have IT stocks that are just taking a bit of a beating, names like Wipro, etc., Apollo Hospitals, Bajaj Auto, also some of the big losers this afternoon. But by and large, you'd have to say power stocks are doing quite well, as we've elaborated over the last many hours. By and large, you'd have to say it's a very, very range-bound day of trade, no real triggers for the market. So I guess, it makes sense to focus on individual stocks.
Hi, Sonia. Hi, Mangalam. Yes, absolutely. I'm just heaving a sigh of relief that there's no pharmaceutical stock which is moving today. So that's definitely a little bit of low news flow which is taking place, at least within that entire space. The Nifty, however, is hovering around that 20-day moving average. We're above those levels. Let's see whether we manage to sustain, and that would be a key support area to watch out for. But it is a lot about the capex infra-related stocks today. So all of that seems to be powering ahead. Metals, the L&Ts of the world, the Siemens of the world, all of that is on the upside. Fed minutes continue to be in focus because that will determine what the trajectory might possibly be for the Fed going forward. A lot of stocks, however, at fresh 52-week highs, which we will be discussing, the likes of Persistent, Shree Cement, Siemens, to name a few.
Yes, we do have a bunch of stocks which are all in focus. It's a bit of a tug of war between bulls and bears, and the lines are so narrow. We have 17,850 at the lower end and 17,950 to 18,000 at the upper end itself. Question is who gives in first. Meanwhile, the mid-cap index at an index level was underperforming for most part of the day, and now because the index, the Nifty itself has come a tad off highs, the mid-cap index appears to be outperforming again a tad. If you just take a look at the advanced decline lines, they're at an even keel, no real cues coming in. Maybe we start getting some cues tomorrow from the second half and day after, which would mean the expiry trade plays out. But currently, as we speak, AB Fashion is a stock which is uncharacteristically low right now, down by about 4.5%, volumes piling up. So it'll be interesting to see where that goes as well. So individual stocks in focus, but we've been harping about how power stocks are buzzing in today's trading session. So let's go straight to Vivek, who will tell us more and what has them powered ahead. Vivek.
Well, absolutely. So what's actually happened is that, the Ministry of Power has gone ahead and invoked Section 11 of the Electricity Act, which basically means that now they've gone ahead and given a mandate to power companies to import coal in case it is necessary, especially given the fact that they're anticipating a significantly higher demand in the coming months, especially given the fact that when you're talking about the summer season, the impact of the demand is something that causes a significant amount of requirement for coal supplies. So a similar move was taken last year, between May and December of 2022, and the key beneficiaries, of course, were Tata Power as well as Adani Power, given their power plants that they have at Mundra, where they actually go ahead and import coal from Indonesia. And now, talking about the impact of this particular move, Citi has come out with a note on the entire electrical utility pack. What they're saying that this particular move will benefit imported coal-based power plants, and the imported coal-based power plants currently are unable to pass on the full fuel cost pass-through, which Section 11 allows. So plants currently operating at very low capacity, and especially what they're talking about is Tata Power's Mundra UMPP, where they say it will benefit significantly for the period under which Section 11 is in force. We spoke to other analysts as well. Analysts believe that this is quite positive as far as the entire power ecosystem is concerned, especially coal-fired power plants. Last time, when this particular development happened in the first quarter of FY23, the PLF, or the plant load factor for NTPC, improved from around 70% to a little over 80%. And merchant power plants too are likely to rise. So another beneficiary on anticipated higher demand is going to be IEX as well.
Okay, thanks a lot for that. Well, the other stock that is in focus this afternoon is Minda Corp. It's losing in trade today. It's down, I think, about 4% the last time I checked. Now, the management had a conference call yesterday, and it said in that conference call very categorically that this stake buy of 15.7% in Precol is just a financial investment. Now, they will continue to be just a minority shareholder in Precol with no special rights, and they will continue to explore all opportunities going ahead. They are quite bullish on the growth prospects in the instrument cluster space. But the reason why the stock is under pressure is because their investment will only be a financial investment. So what is the way forward, and why have they used, cash on their books to go ahead, or the QIP proceeds to just merely make a financial investment? In fact, Nirmal Bang put out a note where they said that the deal is pretty much EPS dilutive in the short to medium term. And by making this investment, what they've done is they've foregone the interest income. They could have rather deployed those QIP proceeds in a manner which would have yielded higher return ratios for the company. And from a capital allocation perspective, it's not the best decision, and it is a very aggressive call. In fact, Nirmal Bang has downgraded the stock to an accumulate from buy. So clearly, this investment and the fact that it's just a mere financial investment is not gone down too well with the street, and the stock is now down almost 4%. In fact, let's listen into what the management had to say in the conference call.
Minda Corporation has purchased 15.7% equity in Precol for a cumulative amount of 400 crores through on-market transactions on 17 February 2023. The shares of Precol are purchased solely for the investment of the surplus funds available with the company. Minda Corporation investment in Precol is through market purchases, constituting a minority stake, and this investment does not grant any special rights. Minda Corporation is and will be generating enough free cash flow from operations to fund our routine capex and organic growth. The company has well-positioned balance sheet. We have, after this investment, we'll have a debt to equity at about 0.3, and the debt to EBITDA will be around 1:1. The long-term debt as of today is about 150 crores. Short-term is to the tune of about 350.
Okay, just a financial investment as of now. That's the word coming in from Minda. We need to take a short break. On the other side, we will be focusing on a lot more stocks which are in the news today. Stay tuned.